Everyone, and welcome once again to the OANDA Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now today we are seeing equity markets trading slightly higher. We're seeing a bit of a reversal from the moves of the last few days. Now I wouldn't necessarily say this reflects a more risk on mood. We do just tend to see markets, of course, they don't just move in one direction. You do see sessions where you do see a little bit of a correction, and I do believe that's what we're seeing today. I don't think anyone is any more optimistic than they were yesterday. In fact, when you're looking at things like the property funds story, we've actually seen 2 or 3 more funds now start blocking redemptions due to a lack of liquidity. The same story as we've seen with the other funds. We've just seen the number now rise to 7. So if anything, the UK property market, commercial property market in particular, is looking a little bit more uncertain, and this is one of the stories which was really weighing on sentiment over the last few days. But I think to an extent this is largely, at least for now, priced in, and that's why we're not seeing a broader reaction today. We are seeing a rebound in the pound as well, which is up around 0.5% on the day, just back above 130. We're seeing bond yields creeping a little bit higher, but again, compared to the declines that we've seen over the last few days, this is a very small move. We're seeing oil prices creep higher around 1.5%, and again this follows the API data last night, which showed a much larger drawdown than we were expecting. If we see the EIA figures reflect the same thing today, I'd expect to potentially see a little bit more upside in oil. You'll note that in Brent crude, for example, we did fall down towards the most recent lows from the past couple of months, really. And the fact that we've rebounded on the off there would suggest this may also be partly a technical move. I do still think this is looking bearish. We are still in consolidation in terms of things like Brent crude oil, but we are seeing lower highs being made. But at the moment, that floor is being held in place. I think we could potentially see some more downside, but we just may have to wait a couple of weeks for this to materialise. Elsewhere in the markets, we are seeing the yen still finding some support against the euro and the dollar. And aside from that, like I say, the moves have been relatively minor. We're getting reaction broadly today as well from the FOMC minutes which were released last night. It wasn't a great surprise to these minutes, really, just a bit more caution from policy makers, talking about the need to see some more improvements in the labour market. I think last month's non-farm payrolls number in particular did concern a few policymakers, although one number in singularity shouldn't really cause too much concern. I guess if we see another poor number this Friday or tomorrow, then that may start to raise a few more concerns, but I would be very surprised if we did see 2 consecutive weak jobs reports. They also highlighted Brexit. We have to note that, of course, that the Brexit vote did come after the FOMC meeting, so they did note it as a risk event, which is likely to deter them from continuing to raise rates over the next few months. But the markets are, of course, responding positively to that because it's a little bit more dovish than what we'd seen previously. Now, if we take a look at the economic calendar for today, you can see that we have seen some economic data out, but it's all been pretty low-level data to maybe to an extent slightly outdated data. You look at the manufacturing and industrial production figures from the UK, strong readings here, but I guess this data does account for pre-Brexit vote, and what people are focused on right now is the future, which looks potentially very different than it did prior to June 23rd. So I think people did shrug these off just a little bit. We've got the ADP employment change, which was 172. Last month's figure revised to 168, which is well above the preliminary reading for the actual non-farm payrolls figure. So either this is again proving itself to be very inaccurate, or of course we could see a strong upward revision tomorrow. We'll have to wait and see for that, but I don't think people are paying too much attention to the ADP given how big that miss was last month. Jobless claims again falling to 254, another strong figure from this standpoint. We've still got a couple of bits to come today. NIESR GDP estimate for the 3 months of June for the UK, so effectively the second quarter. First real estimate we've got for second quarter GDP for the UK. Again, though, to an extent this is old news, because what's going to impact the UK growth going forward is far more important than what happened in the second quarter. We've also got EIA crude oil stocks, as I just touched on a second ago. We saw a much bigger drawdown in the API figure yesterday, so it'll be interesting to see if this is again reflected today. But aside from that, all eyes really are on this jobs report tomorrow. Like I say, it's going to have less of an impact than it would have had the UK voted to remain within the EU, but I think people are still going to pay very close attention to it, more so for the reason that if we get a weak report, then I think that will really convince everyone once and for all that a rate hike this year is pretty much off the table. Whereas if we get a strong report and a good upward revision to last month's, then maybe people will start to talk again very slightly about the potential for one at the end of the year, maybe in December. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.